When Russia first invaded Ukraine, no one thought that it was going to be easy, and while the invasion itself really hasn't gone to plan, Russia's economy has actually held up far better than most people expected. In particular, Russia's oil and gas exports actually benefited from the war. They weren't really hindered at all. Now that could be all about to change because problems for Russia's economy are finally starting to show and the cracks are growing. We're starting to get this data coming out of the country that's suggesting maybe everything isn't quite as well as we thought, and some things are actually far worse than we thought too. Now, at first, Russia really didn't see their oil and gas exports suffer for two main reasons. Firstly, most of the West actually just kept on buying oil and natural gas, and the sanctions that would go into effect would take ages to actually come into force. For example, the EU's ban on oil imports from Russia is only going to go into force in December. Secondly, the reduction in exports that we did see to the West was simply met with an increase in the exports sent to the rest of the world, in particular to China and other Asian markets. Now this, along with the fact that oil and gas prices actually rose due to these supply shocks, meant that Russia benefited in this sense from the war shocks. That all might be about to change though as we move into 2023, and it's happening for a multitude of different reasons. This analyst here has this to say: Russian oil companies have been enjoying the beauties of the summer season. Soaring domestic demand and the absence of EU sanctions have allowed them to ramp up production. As we look into the immediate future, that is bound to change. The first thing that's going to happen is that in December, this EU ban will kick in, and that will drastically decrease the amount of oil sold in total. Analysts believe that this could actually be more than 20% of every barrel of oil that Russia is currently selling by the day. Now, why do they actually think this will happen? Well, many Western customers are already refusing to actually transact and buy Russian oil, and this is obviously only going to get worse as an EU-wide ban comes into force. Now, in the past, of course, Russia has been selling this extra oil to China and other Asian markets, as we mentioned, but they've been doing so at a massive discount. It's not exactly an ideal situation then, but surely that's not the end of the world if they have to sell at a discount, right? Well, as we move forward, Russia's going to find a few more problems surrounding that. The first one is that the Asian oil market is simply already oversaturated because they've had this cheap Russian oil for months on end now. There really isn't much need for any more oil over there. Stocks and supplies are higher than they've ever been because they've had this cheap oil for so long. And the second reason that this might be a problem for Russia is because, of course, of this worldwide recession, which is expected to hit China and Asia in particular and destroy all demand in those countries even further. Economic production in these countries will fall, and so oil expenditure, how much they're actually burning per day, will fall as well, and so their demand will follow. There's a very good chance then that we actually see Russia's oil revenue from their exports decrease by as much as 50%, as firstly, prices on the open market fall as demand for oil wanes all over the world, and then secondly, the price that Russia is actually able to transact at is going to fall too, and then finally, the amounts that Russia is able to sell will decrease as well. That is, though, not the only problem that we're seeing Russia face right now. Again, when the war started, sanctions came out, and a big part of those sanctions was banning exports to Russia, i.e. things that Russia needed from other countries. Now, this actually was a major problem for Russia, and it was never going to be anything else because their domestic industry is almost entirely based around commodities and producing those basic materials. Outside of that, Russia actually has an incredibly weak industrial base, in particular in actually quite advanced areas like electronics. It is absolutely abysmal, and suddenly there were no Western imports for these goods. Of course, Russia still needed these goods, and so they basically resorted to the black market to try and get them into the country anymore. We call this parallel imports, and it's expected to reach about $16 billion this year. Usually what this constitutes is random companies buying products abroad and secretly importing them into Russia without the company that produced these products in the first place actually knowing where they're going. Of course, the Russian government is fine with this because they get access to their much needed goods, but other governments are not, and we should expect them to crack down on this process in the future. Now, usually imports are considered bad for the most part for an economy, at least in terms of GDP figures, because they actually drag those figures down. The problem is, though, if a domestic industry can't replace those imports that it's missing, then those imports disappearing is really bad. And in areas like microchips for cars, for example, Russia simply can't make anything to replace what they used to import because there isn't a single company or factory in the entire country that has that productive capacity. Therefore, if these products aren't imported, they don't exist in Russia at all. Now, Russia is expected to import almost $100 billion fewer imports than they usually would, whereas their parallel imports is only expected to amount to about $16 billion, which will likely leave a massive shortfall of missing goods in the Russian economy. It is really hard to say just how much of this will be essential goods and how many will just be discretionary, as Russia has stopped publishing figures about their imports and exports after the war. But the fact that Russia is actively trying to hide this information and hide this data suggests that it's probably bad because they really don't want it public. Now, of course, Russia is well aware of the problems that they're facing, and they're trying to improve relations with a number of different states to try and grow their support and ensure that they can remain in power and keep the economy functioning. Recently, we just saw Putin come out and announce that he wanted to expand his partnership with Kim Jong-un and North Korea, which is hardly a superpower relationship. I know those two countries have also been loose supporters of one another for years now as well, but this is going to increase the levels of support for his regime. Russia's also seeking to reward those countries which have already sided with them over this war, or at the very least not sided against them and for Ukraine. For example, the Moscow Stock Exchange is opening up to certain foreign investors, allowing them basically to transact and invest in Russian companies at what amounts to rock bottom prices, as Western investors have absolutely disappeared due to sanctions. And so these new investors are basically being invited into the country to make massive amounts of money. Russia's list of unfriendly countries is specifically excluded from these privileges, and those countries basically amount to NATO and their allies like South Korea, Japan, and Australia. This is actually quite a smart move by Russia. They're allowing their allies, or those who are likely to not side against them in the future, to profit off of this relationship, and so it encourages them to become closer friends and allies with Russia in the future. Will it actually work in the end? Well, it's very hard to say, but it has potential. At the very least, we do know that Russia is going to have a massive, huge problem regarding foreign investment as we move forward into the future. There will be close to zero capital coming into the country from the West in the future, as why would you ever invest in a country like Russia when sanctions from both sides, both Western and Eastern governments, can absolutely destroy any return you might have? Russia absolutely needs this foreign investment, and they're seeking to get it from other countries like China and Saudi Arabia. This does now come at the same time that the West tries to cement this East-Western rift in relations and economic connections as well. American banks are finally going to be allowed to help customers actually sell off their Russian positions, which would seem like a good thing for Russia and a good thing for relations between East and West, because before, Western investors really couldn't trade in Russian assets at all. So is this an example of improving relations? Well, I don't really think so. These investors are only really allowed to decrease their positions, not increase them, and it seems that the reason this is happening is because Western governments, and the US in particular, don't want to bankrupt their own people who invested in Russian markets in the past, so this allows them to not take a 100% loss on their investments and to slowly wind down their positions. They still don't want them investing in Russia, and so I do see this as cementing this East and West divide, and maybe even the start of a new Iron Curtain. Now, how exactly is Europe faring during all of this? Well, the EU in particular is really not doing well. A recession is almost certain at this point, and this isn't just coming out from me. This is coming from almost everyone who pays attention to this stuff. Now, this is a little bit different to the situation in the US. Firstly, the EU is more energy dependent on Russia, and so they've seen bigger price spikes due to that since the war actually started. And in general, there's just far less optimism in general across the pond. There's more pragmatic reporting, and it's likely a little bit more accurate too. Germany, though, is likely to see zero growth this quarter, and that is the powerhouse of the EU as a whole. They're a big goods producer, but they're also hugely dependent on cheap energy to actually go forward and produce those goods. And energy is getting more expensive by the day, as we all know at this point. Now, it isn't just businesses and corporations and manufacturers that will be impacted by this. Individuals and families are struggling too. Inflation across the EU and Europe in general is nearing in on 10%, and it's likely to hit that level and probably even go higher in specific places. That means that people will simply have less cash left over at the end of each month for discretionary spending, and that will massively impact the economy. This article here is talking about what economists think will happen, and it's coming from a recent survey directly from Bloomberg, but I would caution you all to just be a little bit careful of this kind of data coming straight from Bloomberg, because frankly, anyone who reads Bloomberg regularly can claim to be an economist and partake in some of their surveys. Now, another major problem surrounding energy prices in Europe and natural gas prices in particular is the fact that winter is on its way. Right now, we are, of course, in summer, and it's been a very hot one in Europe. There have been loads of 30-degree plus days, and there's a drought in many countries as well, including the UK. The simple truth is that no one's really heating their home right now, but that will change in the winter. Most central heating in Europe uses natural gas-fired boilers, and everyone knows this, and so Germany is building up reserves of natural gas. And while they are ahead of the schedule that they set themselves, they are still nowhere near what is sufficient to actually ensure that prices don't spike and go massive over the winter. Russia is, of course, well aware of the influence that they hold over Europe as a whole because of this, and so we should expect maintenance problems in winter. We should expect reduced gas flow into countries like Germany, higher prices, and some gas scarcity too. Obviously, this will impact the economy. If prices are higher, there's a higher cost for families, there's less spending in the economy, and it'll be more expensive to produce goods, and so there'll be lower profits for businesses as well. But that just isn't the whole problem though, because a total lack of gas altogether is a potential problem too. There's a possibility that there will be just no power whatsoever. There'll be no heating for people in their homes. Businesses could easily go bankrupt and people could even die from this. Now, I am fairly cynical about this whole situation. I do think it will be worse than the media expects, and I would love to be wrong about this, but either way, this is certainly something to pay attention to. Finally then, since the start of the war, of course, the Black Sea has been dangerous as you would expect, and so cargo shipping has been limited in the area. Now, Russia and Ukraine are obviously massive wheat exporters, some of the biggest in the world, and the amount that they've been exporting has massively reduced since the war started, as you would expect. There have been fears in famine in particular because the usual export of foodstuffs to this region have just not been as frequent, and it has gotten really quite bad at some point. There has been the potential that millions of people could actually starve, but a solution was in sight. A ceasefire treaty between Russia and Ukraine regarding cargo in the Black Sea was brokered. It took a long time to get to that point, and Turkey has been a massive key player, a facilitator here, but in the end an agreement was made. Now, the first day the agreement was actually in place, Russia then proceeded to bomb Odessa's port, breaking the agreement, seemingly killing the chances of it actually being a success. But that was now a few weeks ago, and somehow negotiations continued, and the plan actually seems to be working now. The first UN-run cargo ship with wheat has just set sail from Ukraine for Ethiopia with 23,000 tons of wheat, which isn't alone enough to prevent any kind of famine, but it's a good sign of what's to come. We just might be entering a period of food commodity prices that are actually falling after they've seen massive spikes in 2022 so far. This could be a sign that those spikes are coming to the end. This is good news for commodity prices, and it's good news in general. It's a step forward, so we can hope that this continues going in that direction. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Thank you all for watching. Stay stoic. Until next time.